Great. Well, welcome everyone to this Views from the Capitol edition. We're going to be talking about the budget with Bob Dewan from the Michigan School Business Officials. I am Jennifer Smith, Director of Government Relations for Michigan Association of School Boards, and also helping us out today with your technical questions or putting things in the chat that you need is Deshandre Bedingfield, our Policy Analyst and Grassroots Coordinator. We will have all of you muted for now as we present. If you have questions as we go, please put them in the chat box and we'll be happy to cover those as we go. We'll also have time for questions at the end. There is a raise hand feature, but if you can try to use the chat box as much as possible, that makes it a little easier on us as we present. When we're done, I know some of you on the phone can't see the chat, so we will read the questions and we will take questions from people over the phone at the end if you can't raise hand or use the chat box. So the governor is expected to sign the budget in about an hour to an hour and a half. We're hearing there will not be many vetoes, and that was expected since she had worked on this budget agreement with the leadership in the House and the Senate. There is a section in there, 152B, that many of you are familiar with. This is the section we have been fighting in court about funding to non-public schools. They didn't put a large amount in this line this time. They just put a $100 placeholder to keep the section in the budget, and she is going to once again veto that. That case is expected to be heard this fall at the Michigan Supreme Court, so we'll have more information on that coming up. But we don't expect many other vetoes beyond that. So I'm going to have Bob cover a lot of the numbers, and I will cover some of the other boilerplate and other sections that are in the budget. And as I said, if you have questions as we go, simply put them in the chat box. And I will turn it over to you, Bob.
Well, thanks, Jen. Appreciate being included here with the MASB Views from the Capitol. Always an exciting day for us. We all get all pumped up about noon, and here we are. So I'm Bob Dewan from MSBO, the Deputy Executive Director, and I cover all the financial affairs for school business managers, which I appreciate you all being here with us today. Not only board members, but also I see a bunch of people that I know, and wouldn't be a meeting without Howard Barron, and I see him here too, so terrific. Just what I needed on a day like today. Hi, Howard. So here we go. What happened? Well, things really changed, didn't they? Back in May, we were talking about big reductions. We were talking about looking at budget for next year, making significant cuts, upwards $600 to $700 per pupil. And I think that was a real shocker for a lot of us. The pandemic was in full swing, and we didn't know what to expect. And lo and behold, here we are at the end of August. We have another consensus revenue estimating conference, and I'll be doggone if we don't have some excess funds available, due in part by the federal government and the stimulus packages that we have seen at both the state level and on a personal level. And so why do I say that? Well, if you look back at the revenues from May to August, there were significant increases in sales tax and significant increase in withholding taxes from payroll. So there was a major increase in unemployment and unemployment claims. And as a result of that, it provided a lot more withholding than is normally expected for unemployment. So those two things happened kind of on a personal side, where dollars were coming into the state through stimulus and being spent on things that were taxable. People weren't necessarily going out to dinner. They were reinvesting in their homes, maybe buying a new refrigerator, and all that generated the sales tax. If you found yourself unemployed or a loved one unemployed, there were certainly additional dollars being provided. In many cases, people withheld from that. Those were good things. The other thing that we saw was on the horizon an influx of funds, which we now know being coronavirus relief funds. And that ended up being in grand total somewhere over $700 million. So there was certainly a greater revenue expectation that we see in the state side, as well as CRF funding coming from the federal government. Those two things have put us in a real different place than we were back in May. So where did this all end up? The governor came out with something in February. We certainly took a look at that way back then, and it looked pretty good. Then things hit. So where did we end up? Well, I guess the good news, there's good news and there's cautious news. The good news is things don't look so bad for 2021, due in part by some carryover funding, due in part to one-time stimulus funding. So it's good. We aren't seeing the big hit that we were expecting. What's the cautious part? The cautious part is that 21-22, the following fiscal year, doesn't look so great. In fact, it looks a little weaker than what we're seeing in 2021. So from a bottom line perspective, I'll get there quickly, be careful about any increases or consistencies that your district will see in funding for 2021, the coming year. Because the following year, some of those funds might not be available. We may not have growth to be able to support what you're going to receive this year. Meaning, don't spend these monies on programs or building in costs that are going to carry on year to year to the extent possible. So foundation allowance is probably the big deal. Foundation allowance, what is it? Well, I'm going to tell you it's what it was last year. Now, you'll say, Bob, but we got $175 per pupil cut last year, didn't we? And I say, yes, you did. You were prorated, but it didn't change the foundation. The foundation stayed at the minimum of $81.11. And as a result of that, $81.11 is going to be the 2021 minimum foundation. Don't worry about the 175 cut. That happened last year. That was absorbed through your budget, and the foundation was not impacted. So that's a really good thing. We're happy to see that. At the same time, there's a 3-year blend for districts that are out there on a 3-year blend, and you've lost students, and you've had the opportunity to blend the 3 years counts. So it kind of lets you down a little easier, if you will. That is still in play. So 3-year count or 3-year blend for the count is still in, using what would be called now the super blend, and I'll explain that in a minute. Using the super blend as one of the years in that 3-year calculation. So once again, 3-year blend is still in, using the new super blend as one of the years of the 3. So what is the super blend, or how are we counting kids? Well, certainly there's been some changes in pupil accounting. We're not going to get into all those today, but there has been slight changes in pupil accounting because of the way that you are providing education within your district. The key to it, though, is that there's been a decision made that for districts who are losing enrollment, there will be a heavier weighting on the final last year FTE count for your district, number of students. They will weight that higher and use that in the calculation for the 2021 school year. Generally, we use 2 counts. We use your February count from the calendar year, and we use an October count from the calendar year. Those 2 counts divided up 90% fall count, 10% what would be the past spring count. That's what normally makes up your FTE count for foundation. What they have decided to do this year is use that same count methodology, but use last year, which is 1920's final FTE count based on the 90-10, and weight that at 75% of the pupils you will be paid for in 2021. So they are weighting last year's final numbers at 75% of your 2021 funding. That means your counts that we would normally say is your 90-10 for 2021, those are worth 25%. So what that does, if you're a district who is losing students, or at this point are losing FTE due to potential losses for cyber or virtual educational components, because you may be using a different district to do that or whatnot, you will, at some extent, benefit from this, in that only 25% of that reduction is going to be recognized this year. So if you're a district who is growing, that calculation, the super blend, hurts your district because it's heavily weighting last year's count, which was lower, then it's going to weight the new count, which if you're growing is going to be a little bit bigger. So what they did with that is they took a look at that and said, okay, here's what we're going to do. We're going to calculate the super blend on all districts. And then for districts that are growing, we are going to take what it would have been if we weren't doing the super blend, and we're going to use that as part of a calculation that will give you additional funds for the difference in FTE between the super blend and what you would have received in a non-pandemic 90-10 world. So it's an attempt to help districts who are growing, not to hurt you because of a change in the way that we are calculating state aid for pupils and number of pupils that you'll receive state aid. So that's a good thing. Those are two things I think they're helping those districts that are losing funding due to less students, but they are helping out, maybe not fully holding harmless, but helping out districts who are growing and otherwise would have been hurt by the super blend. On top of all this, and kind of amazingly, and this is the cautious part, there is an allocation that will be an across-the-board increase for every district, $65 per pupil. So kind of interesting that, you know, we talked a while ago about maybe a $650 cut. Well, now we're retaining our same foundation as last year, and we're increasing $65 a pupil. So across the board, that will be received by your districts in addition to some of the other things we've talked about already. So that's a good thing. So in a normal year, what would I say? I'd say, hey, foundation allowance is the same as last year, and everybody gets 65 bucks extra a kid. That's a real high level, even though there's some changes here, as I just discussed with the calculation of FTE. But in general, that's not a bad budget in considering what we were looking at back in May. ISDs, within this whole discussion, the ISDs did not receive an increase, and they will be operating at the same amounts that they had last year. MPSERS rates, this is kind of an interesting area. We watch this, you know, when you're building your budget, what do you think? Well, you're thinking about staff salary increases, you're thinking about your health insurance increase, and you're thinking about MPSERS cost increase. Those are the three biggies that you're putting together for budgeting on the expense side that you need to know more about. Well, the MPSERS rates have changed. Now, the MPSERS rate over the last several years has been somewhat, any increase has been somewhat offset due to the fact that many of the increases that we saw were based on the fact that they were changing assumptions within the MPSERS program, within the retirement plan itself. And those assumption changes were causing increases in rates that were then offset or picked up by the state through our 147 allocations. This year, what I'm going to tell you at this point, in the feedback that I received from both Senate and House Fiscal, is that there's a potential that the 147 allocations that you have been receiving are not going to cover the entire increase of the retirement rates. So each district will be a little bit different depending on how many or what employees from your district are in which one of the programs, but from a very high level, MPSERS rates went up. And it appears to me at this point that not all of those rate increases will be offset with district allocations of 147, as we've seen in the past. I'm going to clarify this with them before I get real into the weeds on rates. But it appears to me about half of the rate increase would not be covered by 147s. We will try to get some follow-up on that. I think everybody downtown today is a little bit busy with the governor signing off to respond in a quick manner. So we understand that. But I guess the bottom line for me is this. You're going to see $65 extra a student, and that's across the board, all districts. Part of that increase is probably going to go to offset some of the increases you'll see in the retirement rate that are not funded by 147 allocations. So that's more of a caution. Be sure you understand that when you're revising your budget here coming up, because I'm sure a lot of you weren't expecting what we received in the end. I know I certainly wasn't. So MPSERS, there was also a calculation change in the way that there was a distribution of 147A. And I apologize to the board members who are saying, what is he talking about, all these numbers? For the finance people on the line, they know what I'm talking about because I'm talking about sections of the school aid bill. So 147A2 to be exact is a calculation, will be a calculation change, and it will change what districts are receiving there depending on the number of employees you have within a certain category of retirement. So once again, the finance people know what I'm talking about. What's the impact here? Some districts may see a little bit more. Some may see a little bit less of what you had last year, but it should line up better with your actual costs. What we were seeing was that some districts were benefiting greater than their cost increase. They were receiving greater reimbursements, and other districts who had larger increases were seeing smaller reimbursements. So that calculation has been changed, corrected, if you will, but I'm just giving you a heads up. Make sure you check that in your budget revision, that number might be changed and it may be beneficial or it may not be. Just be careful about that one. Special education costs, we saw last year an increase in reimbursement rates of 2%. That is still in play this year. That was not increased, it wasn't decreased. 2% increase, the same as we saw in the last year budget, that stayed in place. Now, I have two topics left that I want to talk to you about, both a little bit complicated, but I'm going to go as slow as I can here. And I'm watching my time because I know Jen told me this is an hour and that's it. And I can tell you that I could talk for 3 hours, as most of you know.
Before we move on to those couple things, I have a couple questions about the $65 across the board increase. One question is, was there a reason it was not applied to the 2X formula? And that would be a governor legislative question, but I believe because it went through a different categorical, it's not done through the 2X. And it's done in the same way that they did the cut back in July. But the question for you, Bob, is we know it's a separate categorical, section 11D is where it's at, but is it based on all students, the Superfund calculation, or I think they set up a 50-50?
Yeah, on the across the board, it was a 50-50. That's correct. So it's using the idea of a super blend, meaning using 2 years of foundation allowance, FTE, but it's 50-50. It's not the 75-25.
And the last part of that is, do out of formula districts get the student allocation as well?
No, I was waiting for that from Chris. You know, those are always the tricky questions. Chris, I will have to go back and review that to be sure. I don't want to say something and not have it accurate. While Jennifer is providing information coming up on boilerplate, I'll jump out and see if I can pinpoint that. My expectation is yes, because of how it came through, but I want to verify that before I go that far. So I'll do that when Jen's going through boilerplate, and hopefully I can have something on that before this ends today.
And there's a MPSERS question. The analysis that came out on 147A by district, is this the estimated impact that you were referring to?
Yeah, Misty, here's the deal on that. The 147A, the estimate was done on prior year. When we saw it come out of the governor's budget, we asked if we could get a district by district impact of 147A. They provided that, but once again, that was based on 19 information, not 20. So we did post that again out on our website, and I know we're going to give you some resources later. However, I would say this to you, be careful about those numbers because they were estimates at a point in time a year ago. Those numbers, the calculation methodology is the same. It's just that those numbers are not going to be exactly what they end up being because I believe it'll be based on 20's payroll, which ended actually today. Today's the last day of payroll for MPSERS.
And on the $65, there's a question, will there be restrictions? It's my understanding there is no restrictions on that. You can spend it as you see fit. The money that you had restrictions on that you got in August was CARES Act funding, and that had restrictions that flowed from the federal government.
Correct. Well, good. All right, I'm gonna jump into my last two. I got 8 minutes left. So I'm gonna jump into the coronavirus relief funds. And this one we could talk for 2.5 hours, but here's what you need to know as a school board member and what we have drilled into finance people so far. As a school board member, you have to understand a couple of things. Number one, the budget has changed significantly, and that was due in part to coronavirus relief funds. And that's a good thing. The issue is this, from an accounting standpoint, those funds for the most part, and there's some exception, but not much. For the most part, those funds are going to be recorded in your financial statements of 2021. In other words, next year. Right now, your finance people have closed out their school year as of June 30. They're going through an audit of June 30. And this $350 and a couple other allocations, depending. Some districts may show some of this funding, most probably are not. Those funds are going to show up next audit. So when you see your audit, when it's finalized this year, you're going to see some differences from maybe what you would have expected, because the 175 cut per pupil will be recognized back in your 1920 audit, which is your June 30 audit that your folks are working on right now. So although the funds did come to us, and we did actually receive them in August, which was great, and we appreciate that from MDE, because that didn't put anybody in a cash flow problem. They took away $175 per pupil in August, but they gave us $350 cash per pupil. So we actually ended up in a good spot from a cash flow. It could have been much worse, but that is not going to be recorded until 2021. So what does all that mean? Well, it doesn't mean much. It just means that you should be aware of that when you see your audit, and I'm sure your finance folks and auditors will explain that, but it's still a good thing we received it. Now, how can you spend it? What can you spend it on? What days are qualify for expenditures? And we have a few different pots of funding here. We have what's called ESSER funds. We have another pot called CRF funds. We had a pot of money that the governor controlled. And we received these things at different periods of time. So right now, you're going to recognize those revenues next year. I should really technically say is this year, because we're there. But you are going to be able to use some expenditures all the way back to March 1st, due to the fact that that's when this pandemic started, and that was the start date of many of these funds, either March 13th or March 1st. So we can go back and gather some expense from last year in order to use up some of these funds. Now, how clear cut is this? Is about as clear cut as making sausage. It's not very clear cut. The problem with it is this: it's very difficult for the Department of Ed to provide us specific guidance due to the fact that they haven't received specific guidance from the U.S. Treasury, who controls the coronavirus relief funds, and U.S. Ed, which may or may not have a part in this. But they have not received any guidance of substance that they can share with us and say, here's what you can spend it on. The best we can do, we received a frequently asked question about coronavirus relief funds and allowable uses. And it was very open and vague to some extent, that if you've incurred costs as a result of reopening of your schools in a safe manner, and it is related to the coronavirus pandemic, then you can use these funds to do that. So what does that mean? Well, I don't know. I mean, it means it's well open for debate. I can tell you this, what we are saying to people, the department put out a very nice schematic which shows due dates and it has different fund sources, and it's actually pretty nice. It'll actually get into a little bit of the allowable costs, at least from a date perspective. What it doesn't do is says, hey, your teaching staff from March to June, you can take all of those dollars and you can use those coronavirus relief funds you received to pay for that. Or you bought a camera system that you didn't have before, or maybe even bought some PPE supplies. Yep, you can use all those. Now, some of these things are probably a little bit easier than other things. So we don't have great allowable cost guidance yet. I'm not going to say we're going to get it anytime soon, but there are differences at the federal level about what all of this means and how we are to spend these funds. What we have heard from auditors, and Plant Moran, Holly Stefanski from Plant Moran, and Chris May from the Department of Education have been on top of this, probably the two most knowledgeable people about it in the state. And I can tell you they're working very hard on providing guidance and really, really giving districts good opportunities to document what they're doing. If you learn anything today about coronavirus relief funds, document what you're doing. Date it. Make sure you know, why did I spend this money? Why did I think it qualified? And can I cite something? And I would go back to the $350 per pupil that you received. It's really $362 because there was some money in July of $12 a kid. I would go back and I would say, here's how I'm spending it, very high level. I would document why, I would document the date, and I would cite the U.S. Treasury frequently asked question number 53. And you'll see where you can get all this type of information on our website, because we have posted FAQs and some other resources there. The key to it is this: your auditors don't know how to audit this yet because they haven't received the supplemental audit guide for coronavirus relief funds. So asking your auditor, I don't know, they're kind of in the same boat everybody else is. They are expecting that in the next week, they are having their annual conference. That's a national deal for auditors. They believe the supplemental will be coming through at some point in the very near future. That will help them understand how they should audit it, and at the same time give us the ability to understand a little better how to document. I apologize if you hear these birds out here. They're getting kind of loud. So the key here is this: coronavirus relief funds, although the U.S. Treasury said, don't worry about documenting the first 500 bucks, because that was a question I just saw pop in the chat. Don't worry about the first 500. We're trying to make this administrative streamlined. Simply, if you're under 500, don't worry about it. Well, it sounds good, but I'm going to tell you, I wouldn't buy that yet. You still need to have an idea of what you spent the funds on, and you're still going to have to record those as a federal fund received, and they will still fall under and are subject to your single audit, which is an audit of federal funds. So the key here is document, research before you spend, and make your best decision. Plant Moran, Holly described it two ways. There's kind of a lane one and a lane two. Lane one, I'm going to spend it now because I need it, and we have legitimate costs, we believe, based on what we have for guidance at this point in time. So that's lane one. I'm going to document all I can. Lane two is I'm going to sit back. I know I have those funds. I know that there's probably some expenses so far. I'm going to sit back a little bit here and wait and see what kind of guidance comes out. Sounds reasonable. The trouble is, as of today, the due date spending
I think you froze on us, Bob. While we're waiting for him to unfreeze, I'll touch on a couple of the questions in the chat. One was about, will there be an additional stimulus this year and impact on the budget deal? If the federal government comes through with a stimulus that appropriates dollars for schools, you will see a budget supplemental come through. At this point, I don't know if they're going to get it done. Every time we talk to our national counterparts, there's another glitch in the system, and they just can't come to an agreement. I wouldn't expect to see anything before the election, but you never know. But if there is some sort of stimulus that comes from the federal government, then yes, you will see a budget supplemental to spend that money in the school aid fund. There are no large cuts and categoricals in this. We were able to maintain most of them because of the revenue uptick that Bob talked about at the beginning. The 11D revenue shortfall reduction that occurred in August doesn't exist in this budget. So you're starting with the same amount of money in that line item, and then that's where the $65 per student is being added. So it is back in for this budget. It's not going to be something that backfills into last year, but as you start this year, that cut doesn't exist. This $175 is back.
Hey, Jen, I did get back. I'm sorry.
There's Bob.
Computer said unstable, and I thought it was me, and then the internet dropped, so I apologize for that. So coronavirus relief funds, Justin, wrapping that up. I'm not sure when or if we're going to get guidance any more than we already have it. The recommendation is to work with your auditors and be sure you document how you believe you are spending those funds appropriately. I would go right back to 53, FAQ 53, and use that as a very strong guide. More to come on that, I'm sure, as we get through the auditors getting their supplemental information. So for the most part, we are somewhere, and the key to it is we do have those funds. Do I think that districts are going to have problems spending that by December 30? At the end of the day, I don't think so. I think it will become more clear as we get some either more guidance or more direction from the federal government. I'm not sure it's going to happen tomorrow, but I think you're going to have ample time between now and December 30th to spend those funds. Last thing, Jen, then I'm turning it over to you. Included in this budget was a couple of interesting things. One is called the teacher retention stipend. So if you didn't see that, here it is. It's 99Z is the section. Now, what that does, and it's interesting, I reread it this morning, that is an application process that you would be able to apply to receive funding, state aid, to pay first-year teachers a stipend of $500 or $1,000, depending on your economically disadvantaged percentage of students. You would apply for those funds, you'd receive those funds, and then you would match those funds with $500 of district general fund money coming from somewhere else, most likely your foundation, that you would match the 500 or 1,000 with 500 from the district's funding. So somebody asked me, well, do we have to do this? The answer is no, not if it's an application process. If you don't apply, then simply you don't get it. Now, is it a good idea to apply? Well, this is the idea here is for you to attract new teachers. And this would be a first-year teacher, the first time that they are recorded in the registry or the rep report for your district, meaning that it's their first assignment, it's their first time in your district. There's some qualifications to it, but for the high level, it's probably a good thing. But if you accept that, you will have to match it at $500. So there is a cost, although, hey, it may be a benefit for you. There's another thing out here that we heard back in July that was called hazard pay. And if you recall, the hazard pay was for teaching staff, and at that time, it wasn't support staff for contracts. And now, though, in the end, it ends up to be payments to teaching staff, support, and to contractors for hazard pay. Now, I'm not exactly sure. I have not seen it yet from Treasury of what the specific eligibility will be. And quite frankly, we, from a district standpoint, we're saying, hey, that's great. Treasury can do whatever they want. leave the districts out of it. We don't want to pay that through payroll. We don't really want to have a part in that. It appears to me that districts will have to have a part in it in order to document who is an eligible employee to receive these funds. We had a meeting last week on Friday with some representatives from Treasury. They do not have this hammered out yet. It was very evident to me that they will be looking to the districts for some information. And unfortunately, that is something that we're just going to have to follow. But there will be a hazard payment. I'm not sure when it will take place, but it will not come through the districts. So that's a good thing. I did have a question, last thing for me, on addition to language that we are going to pay staff to the extent practicable. And I'll tell you, I had to look that one up. It's been a long time. But to the extent practicable, not practical, it's a different word, during a pandemic. So there's a question, what does this mean? Well, it almost sounds like at this point, Jen and I briefly discussed it, that in a pandemic, if you need that person, if that person has to be there to work, then you're going to pay them. But if you don't necessarily need that individual position, then you wouldn't have to pay them. Now, I've asked for clarification because I've had many districts ask, does this mean we have to pay everyone? Or does this mean we just have to pay those folks who we really have to have on staff to provide services during this time? I'm going to say that that's still in the balance, but through Jen and my discussion, it sounded like if they were a necessity, then you would have to continue to pay them. If that position was not a necessity, maybe you wouldn't have to. So we'll have to get clarification on that.
And that was in dealing with the contract employees, because last year in the spring, you were required to pay your staff, and there were a lot of questions about whether or not you had to pay contract employees. This language specifically mentions contract employees. And so the questions have been, well, do we have to pay our contractors if we're not using them? And that's where this, the extent you can comes in.
Okay, based on the chat, my time is done. It's time to go put out more bird seed.
Well, we've got some questions first.
Oh, there's more. Okay.
Has a decision been made on what year the child care relief fund should be recorded in?
I believe all those are going to be 2021. I'll check on that one too, but I am pretty sure that all those funds are going to be 2021.
And are there districts that you've heard about that are having difficulty spending the CRF funds by December 30th? And sort of related to that, are there any funds that you've heard of that will have to be repaid if they are not spent by the deadline?
Well, I believe, number one, I've heard districts say, I don't think we're going to be able to use these funds. And my question back is, well, why do you say that? And the answer is because I don't know what the allowable costs are. So as I said earlier, I think as that becomes a little more clear and we can get maybe some more definition of the FAQs that we've seen, we might understand it a little better, and you may see it opens up a little bit more of the flexibility on the use of those funds. The belief is the reason why that FAQ came out so vague was it was an intention to get us down to a supplanting road without saying supplanting. So I can't say you can supplant with those funds because you can't. However, the flexibility that was given in order for you to reopen your schools in a safe and orderly environment, whatever the costs were for that, you could use those as part of the cost of this funding. So as I say, it's not as clear cut as it should be. We wish we could make that happen, but it's just going to take some time, I think.
And there's a 31A question. For those that are out of formula, the budget maintains 31A at an allocation of 30%, but adds intent language. What does the annual increase look like, and how might this be determined?
I did see that intent language. That intent language is wonderful. but it's simply intent language. In my opinion, you would have to continue to increase funding until everyone was not prorated, which it's substantially prorated right now. I think I looked up the number, don't hold me to it, but it's being prorated about 25%. So you would have to fully fund at risk to get everyone whole, and then look at the group that's receiving 30% and bump them up. So I like it that it's intent language, it looks great, but they are not allocating any more money to help get us there. So this legislature can't tie the hands of the next. Intent's great, but I'm not going to worry too much about it because they didn't put any more money in it. So good to see, but I don't expect it happening anytime soon.
Are there any CTE funding updates? I don't remember seeing any changes in those line items.
The only thing I would say there is that there was a reimbursement that districts were receiving for students that they signed up in programming. And there was, I think last year it was $50 and $50 to have a student sign up for a vote class, and then $50 additional if they were successful in one of the identified programs. Those incentive payments to get folks into VOCAD and CT programming have been reduced. They're still there, but they went from, I believe, $50 per to $35 per. So it was a slight reduction. The governor cut it in half in her budget. This was a somewhat of an increase from what she recommended back in February.
From Melissa Montgomery, we understand our foundation allowance and that deduction on the August state aid report line item was to be reported from 11D, was to be reported in the 1920 fiscal year. The question is, will we see a positive for the same amount in 2021 in the state aid status reporting, restoring that loss that occurred in 1920?
No, you will simply not see a reduction. Once again, that was a reduction that was a proration where you could take those funds out of several different categoricals, not affecting foundation. So your foundation allowance remained the same. So simply by keeping the foundation at 8111, it in essence replenishes the 175. So once again, the 175 was a one-time hit. You took it, you booked it, but it won't come back next year. You're not going to get repaid for it from the prior year.
And then there's a question about 99Z that makes a commitment for a stipend for 3 years. It's legislative intent language. So again, they can't tie the hands of future legislators. It just says that they would like to continue the stipend through a teacher's 3rd year of teaching as long as they remain employed full-time at the same district. So that will be up to the next legislature to determine if they keep that in or not. And then final question for you, Bob, before we move on to my sections, is will there be a reduction or return of CTE funds if you didn't meet the 90% spending requirement due to shutdown?
I don't know the answer to that one. I haven't seen anything on that. But that's a very good question. We should follow up on that one.
All right, well, we're going to move into a few other sections. You can continue to put your questions in the chat. It is 12:45, but if we've got questions, we'll answer them. I know some of you are here in your lunch hour, so if you need to jump off at 1 o'clock, that's fine. We can follow up. And also this recording will be available by Friday on our website, so you could watch it all over again. So I am going to start with partnership districts. That is in section 22P. If you remember when the governor put her budget out, it included a reconstitution shall include closure. This language goes back to May. So if you have to reconstitute your building under your partnership agreement, it may include closure. If it stays open, you have to make significant changes to instructional and non-academic programming, which is in the current law. And then you have to do a review of the principal. The governor's language in January had said you would have to fire the principal. This is just a review of the principal and to see if the school should remain with that same principal or that principal should be replaced. It changes the deadline from 5 years to 3 years. and requires that if you are assigned as a partnership district, you have to have that agreement in place within 90 days or your funding will be withheld. So there's just a few little changes there. The biggest thing is on the reconstitution that you may close the school, but you don't have to. There's a new section 31K, which will appropriates $1 million to relieve schools of unpaid meal debt. This will be prorated if necessary, but the idea is to wipe out meal debt across the state. The districts will have to apply for that to be forgiven. They'll be reimbursed. In GSRP, there are a couple changes here really just to deal with the COVID issues. So these are for this year only. It changes the where you can charge tuition. You would not be able to charge tuition until a family was over 400% of the poverty level. Currently it's 250. And it also says that for this year only, that you can waive the income eligibility requirements so that you could allow other students into your GSRP program to fill those slots. But the slot preference priority must be given to those that qualify under the household eligibility waiver. And that is only for this year. And we think that part of that is aimed at getting childcare for kids, honestly, to allow parents to go back to work. And we know that there are some areas that do have slots open, so this will benefit them. But just keep in mind that this is only for 1 year. Those household eligibility requirements will go back into effect next year. Under early literacy, the 3rd grade reading bill, there is an increase. So they're increasing the money that can go toward instruction and go toward literacy coaches by approximately $30 million. There's also money in there. Part of that goes to the Michigan Reading Corps to reestablish the Reading Corps, and that's just about 2.8 million of it will go to that. And then 31.5 million will be put toward literacy coaches, which will be capped at 112,500 per coach, and it gets rid of the matching grant from the ISD for those. There's a new section that came out of Launch Michigan. Launch Michigan is that coalition of groups that is the nonprofits, the business community, and the education community. They have put together language that would create a new Connecting Information and Education Committee. And this is a placeholder to get this set up. There's no actual funding for this yet, but it would require the committee to provide recommendations on how to replicate and scale best practices among districts that would help Michigan improve faster in academic gains, and how to close the educational achievement gap. The committee would have to consult with MDE, with Sept, the executive branch, legislature, education stakeholders, and other non-governmental organizations to come up with these recommendations and to research school best practices around the state. So this was something that Launch had put out in great detail not too long ago. And so this is sort of a nod to that and see what we could put together. As I said, there's no money for this yet, but this is a placeholder so that the commission can be explored and put together. And then in 98A, your brand new Return to Learn section. There are a number of changes here that we have been working for, and we're pleased to see. It's too bad we couldn't get them in the beginning to get rid of some of the confusion, but they're in here now. So under current law that was passed in August, the continuity of learning plan has to be done by tomorrow. And the ISD then had to report all of the local plans to the state by October 1st. They've extended that deadline to October 9th. So local plans are due to the ISD by October 9, and then, local plans are due to the ISD by October 1. ISD then has until October 9 to report them to the state, and districts have until October 12th to put them up on their website. Once those are approved, they have to be reaffirmed by a board vote every 30 days. We got this language changed to say monthly. So now that reaffirmation vote can be done at a normal, regularly scheduled board meeting. It doesn't have to be a special board meeting at that 30-day deadline. And then we also got some flexibility in the two-way interaction, expanding the staff that would be able to do that. It doesn't have to be instigated by the teacher, and it can be done by another staff member that would be involved in a child's academic progress. So it takes some of the pressure off of just teacher of record to have to do those two-way interactions, and opens it up to more staff to be able to do that. We're still working with MDE and still talking to them about what constitutes a two-way interaction. They are still being fairly strict on that, but at least we were able to get the flexibility on who can do them, which will certainly help a lot of our teachers. And then finally, there's a piece on assessments. And this says that the kindergarten entry observation tool will be suspended for statewide, the statewide requirement for this year. That intent language was in the return to learn plan, but they didn't actually waive it. They're waiving it now. So that requirement to do the kindergarten assessment will not come into effect statewide until next school. And then there is also a new section that requires districts to make the SAT and PSAT available this fall for students who are supposed to take it in the spring if they would like to take it. But schools cannot make it mandatory, and it can't be used in any accountability information going forward. So if the board, the couple questions about the board affirmation, the extended continuity of learning plan is what the board has to vote on once a month, not the initial plan, but every 30 days once that initial plan is adopted by the district. So sent into the ISD, every 30 days it would have to be reaffirmed. This says you can do it once a month. So yes, you would need a new vote every month to reaffirm or change your continuity of learning plan. This was added because they wanted districts to have to go back and look at it, and you have to state again what type of instruction you will be providing. The continuity of learning plan is very specific as to what it needs to include, but the big thing that the legislature was looking for out of this was a affirmation vote once a month that you are going to remain online or hybrid or face-to-face, and have you have that debate and reaffirm your plan every month. We had tried to get that taken out in the beginning. We thought monthly was a little excessive. If they wanted reporting, we could do it on a quarterly basis or something like that. We know that most districts are looking at this plan all the time as things change, but we're not successful, obviously, in getting that taken out. So the best we can do for you is get it at a monthly meeting so it can be done at a meeting that you already have scheduled. Are there any other questions or issues, things we didn't cover? I went through those last few things pretty quickly. There's just not a ton of changes because they were really just trying to deal with the dollar amount. I would reiterate what Bob said in the beginning to be very conservative in this, because while we saw our dollars come back up pretty quickly from May to August, if we end up with another shutdown of any kind over the winter because of flu and COVID, those numbers will tank just as fast. So we do need to be conscious of that, as well as the fact that we are still projected to have a budget shortfall in the next fiscal year still. And while these numbers are good, they are not January numbers. They're just better than May. So we were able to not have to face cuts this year, but it's something to keep in the back of your mind as we go forward. We still don't know for sure what those numbers will look like for the next fiscal year. And right now they look, they don't look good.
Hey, Jen, I've got two questions. I'm flipping through the chat here, and
Okay.
things I had to add here, and Kim Lindsay helped me out on one. Section 18, which is our transparency reporting. Many of you remember us going through all that. Well, within that, there was a change in the date that the financial information database would be due, or the FID upload would be due for a school district. It's generally November 1. The bill actually changed that to December 1. So we have an additional month to upload into FID. The challenge here is the audit date is still technically November 1. Now, having said that, what I have asked the question of the fiscal agencies, was it the intent to change them both? And I believe it was. Now, whether or not that can be or was changed before it went to the governor, honestly, I don't know. It's an open question for me. But right now, FID is due December 1st, not November 1st, but the audit is still technically due November 1st. I don't know if this helps us at all. I think they intended to help us, but unfortunately, we got to see the language before it goes to the legislature. And in this case, Jen and I and others didn't have a chance to do that. We saw the end result, or we could have helped with that. The other one I see here, section 25J and 25I, if the district is open both face-to-face or virtual option by parent choice, does the district receive funding? I'm not sure about that. I think we're going to have to look into that. I'm not as familiar with that one.
Yeah, they're both grant programs, and they're aimed at two different things. So the 25I is attendance recovery, and this goes back to spring. So this would apply for students that did not participate in the spring at the end of last school year, and then are still consistently absent this year. So that grant is a little bit different than the 25J. So that one's dealing with students that are having attendance issues. And it does state that they have to have not participated in the spring. So they're looking for that long-term chronically absent type student to help you pull them back into coursework. And then the virtual learning support grants under 25J, those would be available to districts with in-person or that began this year, 2021, with virtual or hybrid instruction. And so they're two different grant programs. I don't see why, if you have issues under both, you couldn't apply for both. But make sure you're looking at what you're applying for, because they are pretty specific as to what the dollars can be used for. Any other questions, issues we didn't cover? All right, well, Deshandra has put our emails in the chat. If you have questions, Bob and I are always available for you. We appreciate you joining us today. We will have this recording ready by Friday. It will be up on our website so that if you missed anything or you want to go back, you'll be able to view it. And please let us know if we can ever be of assistance. Thanks for joining us. And thank you, Bob, for all of your work on this.
Sure. Thank you, Jen. Thanks for inviting us.